Hello traders and welcome to another video review. Today is Friday, February 27, 2026. Let's take a look at the Forex calendar for today. So what do we have here in the calendar? Tokyo core CPI data published overnight beats the expectations of 1.7 with the actual number 1.8, but it's still lower than the previous number of 2%. Industrial production in Japan up from minus 0.1 to 2.2%, but it was an expected number of 5.5%. Japanese retail sales data are released with 1.8% number, better than the forecast, better than the last number as well. We are looking at the data from the European zone. It looks like we have some data from the French consumer spending, CPI, GDP, and HICP, together with the non-farm payrolls from France. All of this data is scheduled for release Q9. Then we have some data from Switzerland, cough leading indicators, and GDP. Then some data from Spain. At 9:55 we got data from Germany, unemployment change and unemployment rate. During the US session, we got wholesale sales data from Canada scheduled for release at 12:30. At 2 o'clock, we got German CPI data, one of the most important data releases for today. At 2 o'clock, Bank of England MPC member Peel will give a speech, and there we have another key data release for today. PPI and core PPI data from the USA are scheduled for release at 2:30, together with the Canadian GDP and annualized GDP. Chicago PMI is scheduled for release at 3:45, and then at 5:30 we got Atlanta Fed GDP now data. At the end of the day, at 7 o'clock, we got US Barker Hughes oil recount and total recount, and that's about data release. So plenty of the medium important data releases today from various economies. So please expect some sort of the increased volatility. Right, it's done. So now let's start the second part, and we are going to take a look at the charts. We'll start with euro dollar. So the euro dollar for our time frame chart is locked inside of the range. It's locked inside of the range. This range is located between the lows for the potential wave C, 1.1743, and the highs of 1.1835. As you can see, the market keeps moving inside of this range. This level is no longer valid, and I think that we should add to our chart one more level, which will be the low for the wave C, and it will be somewhere here. So this is the zone that the market is moving. This is the range that the zone market is moving inside of this range. Right now, that's the range, and we are waiting for a breakout, because for now 100 pips moving average at 1.1828 is blocking the way to the upside, and the dips are being bought back up. Look at this very undecided momentum, right? Sometimes we go up towards the level of 60, sometimes we go down towards the level of 44, but we are still oscillating around the level of 50, but neither bulls nor bears are in charge of this market just yet. We are waiting for the breakout. Big movement to the downside on the cable, so we can put our corrections to the garbage. We got a breakout above the trend line, but it was a fake breakout, only to almost touch the 100 pips moving average, now at 1.3570, and the market was reversed very strongly. So right now, all of these levels that you can see here, 1.35, 30C, 33, and the other one will act as the technical resistance, 1.3572, 1.3533. Okay, so now that's the technical resistance. We almost hit the technical support for the February 19th, 1.3433, and the market pulled back a little bit, and we are back below the level of 50 yet again on the cable. Let's now take a look what is going on the other charts, US dollar versus the Japanese yen. Well, the movement to the upside it was quite limited, and technical support at 155.57 is still working very nicely. As you can see, we broke above the level of 50. Then partially break again below the level of 50. Nevertheless, the momentum is still strong and positive. We got some bearish divergence here, so we might see some profit taking, maybe some correction, maybe some pullback. Nevertheless, the local high 156.83 and movement to the downside is being bought back up, so the current situation looks quite promising for the bulls. Next target 157.31. Bullish bias. The gold market keeps consolidating inside of a tight range. Not much is going on here after the recent movement to the upside. We've been like this since the February 24th. So for the last 3 days, we've been moving inside of this very tight consolidation. Technical resistance 5,249, technical support 5,093. And we are waiting for a breakout, strong uptrend in the background. We're back to see the SP500. Not much is going on here, as I said. This market is very range bounded these days, and it looks like the end of the February will be just like this. So we got end of the February today, and of course the end of the week. So end of the month, end of the week. Today, last session, it will be worth to keep an eye on the current situation for the S&P 500, might be interesting. Crude oil broke down towards 63.62, just tested the 100 periods moving average and moved a little bit back. Yet again, nevertheless, the bears pushed the prices lower. So it looks like this is some kind of a maybe at least in the short term, some sort of the topping formation, right? And the market needs to do some sort of the pullback. In the background, we have a very nice movement to the upside. It's being developed as a stairs. So we have a impulse to the upside, correction, impulse, correction, impulse, correction, higher highs, higher lows, higher highs, higher lows. So the outlook on the crude oil remains bullish. And the Bitcoin, as you can see, very, very strongly bounced from the lows of 62,485, made a local high at 69,989, almost 70,000, and then pulled back a little bit towards the 50 points on the RSI. Now the bulls are trying to move up yet again. So the technical support saved the day. This one, 66,600. This is the technical support, intraday technical support. As long as it's not violated, the outlook is to the upside. And let me just place the intraday technical resistance for the swing high. Almost $70,000. Any breakout above the swing high opens the road towards the supply zone. We know exactly where is the supply zone. We've been looking at this for the last few weeks. So any breakout above the supply zone is bullish for Bitcoin. Otherwise, we will stay inside of this range for quite some time more. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.